everyone. Hope you can hear me clearly. I'll take you through something very interesting that we promised to deliver today. But before I do so, I'd like to introduce myself. My name is Peter Chamilil. I'm a research apprentice here at Nendo. And yeah, we have Nyasha here and we have Mark. And together Nendo and Ajua, we came up with a very interesting insight and conclusion with the very interesting bits of data that we gathered together. And yeah, before I go into the next few slides, I'd like to maybe ask Mark and Yasha to introduce themselves as well.
Yeah, sure. Mark Kaigwa, founder at Nendo, really passionate about how African brands can be resilient with their reputations and can drive long-term sales and profit for what we think is a continent full of opportunity. So using different sources of data to do that and different skills such as research, marketing, communications, and training. Really excited to be partnering with Ajua to bring a lot of these insights together. So yeah, with that's it. Nyasha, over to you.
Thanks, Mark. Thanks, Peter, and welcome everybody. I think this is quite an exciting initiative that we've embarked on, and I hope that at the end of this, all the attendees will feel that excitement and would have actually enjoyed the data and the way we've wrangled the data to talk to something that is passionate at Ajua, that we're passionate at Ajua, which is customer experience and understanding, how customers are engaging with brands and understanding how they feel about, the customer journeys that they have to go through to get the service that they require. That's the thing that we do here at Ajua, and this is part of our benchmarking report that looks at 6 industries, but today we're focused on the banking sector. And it's going to be an interesting viewpoint, I think, and we'll challenge the bankers that are in the room. I see quite a number already joined. So hopefully you'll engage with us, talk to us, thank you for joining.
Thank you, Nyaka and Mark, for the amazing intros. And now for the one thing that we promised, the AI exclusive AI reveal. So Ajua has a very interesting tool over here that I like to play a short 2-minute video. It's basically a voice analysis AI. Okay, so I think I'm having an issue with the audio, but in explanation, Ajua came up with a very interesting AI tool that allows you to analyze customer experience data using voice, and from that, take out all the manual processes, the slow and biased things that humans love to do, and you get the unheard, missed insights and hidden risks from that data using AI, which is amazing. Ajua is doing amazing work.
Yeah, and as we get the slides, just being shared, I think AI is obviously a big topic and area of interest for many of us. So we are excited to show you this demo from both Ajua, and we have some resources we wanted to start the webinar with. So yeah, we're going to get the slides up, Peter, to help the audience see that and watch the video.
On my end, this screen is sharing. Wait, let me just stop sharing and then share again. Give me 1 second.
I think I can see it now, but I think you can hit play and we can start with the Ajua one. Thanks.
No, I think we're not getting any sound on that.
Peter, let's send the link to everyone post the call.
I'm not sure actually if you maybe want to add a little bit of color commentary here. I think we had the background sound there, but I know this has been something that your team and Yash have worked on really well. We're really excited to see it come to life, and it solves a huge problem with so many teams that just don't have the capability to do quality assurance and sampling. So maybe you can give us a few words, and then we'd be happy to go through the rest of the slides and then get us back.
No, thanks, Mark. One of the biggest problems that contact centers have is that they're just drowning in data. They have lots of data, voice of the customers, and they have two challenges. One, they have to manually listen to a sample of that. That means that you're not listening to everything. You're not listening to what your customers are telling you is frustrating them. You're missing out on key insights related to friction. And there is a bit of human bias that creeps in as you do this. So what our tool does is essentially helps your agents become superpowered. So it's the human plus AI framework. It helps you to go through all your calls without any bias and help you guys to target your reds, your ambers, so that you're quickly responding to your customers, bring out what the friction points are faster, and also helping to improve your agent's effectiveness, whether it's around improving their sales effectiveness, coaching to help them interact and serve their customers better. And what we'll do is post the webinar, we'll push out the link to this video so that you can watch and listen at your own convenience.
Thank you, Nyasha. The link will also be shared in the comments very soon. Okay, and now on to what Nendo is offering here is our crisis and prompt lab GPTs. So with what you can do is you can scan these two QR codes and it will allow you to open up the Nendo Prompt Lab GPT or the Nendo Crisis GPT. For the Prompt Lab, it uses our craft framework to allow you to create prompts that actually have meaning and context within your particular space. And with Crisis GPT, allows you to quickly respond to crises in the right way, sending out the right communications as fast as you possibly can. Now I'd like to pass the baton on to Mark and Nyasha.
Great, thank you. I think just like we've just heard some of those respective resources, but one of the things we know we're really here to do today is talk through banks and banking. And I want to start with something that I hope many of us have noticed, have seen, that could actually get us essentially feeling like there's nothing to discuss today. Everything couldn't be going better if you judge banks by their dividends, if you judge them by their balance sheets, if you judge them by investor confidence. Really, the markets are sending a very strong signal that banking in Africa, Kenya specifically, and more precisely, tier one banks here are doing better than ever. We're seeing global and regional mergers and acquisitions of banks here, and we have the central bank directing all banks to raise the core capital requirements in the next few years. But judging by the last 12 months, you really have we heard in the last week that Nedbank, South African sort of leading bank, looking to acquire Kenyan bank here. And when you look here, you essentially see a great story in the headlines, in the public markets. So banks are winning in the marketplace. So what's the need for a session like today? What could be the reason that we call people today and we say that we're at the trust crossroads and we say that actually all is not so well? Next slide, please. I think for us, it comes down not just to the metrics that are here with these record-setting highs, but that there's an interesting contrast. Now, what we have in front of us is we have banks from, what we'd call all over the scene. So we have South African, global multinational, local, regional, multi-country banks domiciled out of Kenya. But as much as they are winning, as much as there's a lot of victory, I think, next slide, I think there's an interesting contrast. And all throughout this presentation, you're going to be seeing this contrast put front and center between the data from Ajua, the data from Nendo, and what we're calling CX360. And what we're saying here is that it's those same banks that seem to be doing very well that don't have happy customers. And so what we're seeing here is that as much as in the black and white, the banks are doing great, when we look online, when we look across social media, when we look at tens of thousands, hundreds of thousands of complaints, comments, and compliments using social media listening, we see a very different story. We see the central bank fining banks, right, for some of their practices and breaches, right? We see customers deciding that they want to either tag the bank or speak to fellow customers and really let loose with complaints and challenges that they experience. So in some ways, they're sort of putting up with those same banks, and some of these are becoming what we call viral complaints, from what I'll describe later as unbranded mentions. And these are really what are hitting banks where it hurts in their reputation and their public standing, not their share price yet. But certainly in the way of where if you have an audience, as we'll show you, that's expressing an intent to churn, an intent to leave, you have a world where over the next decade, you'll essentially have Kenyans being multi-banked and not expressing some of the lifelong loyalty that many of these banks are cashing in on today because they spent the last 2 decades delivering a pretty reliable, dependable service and experience. Next slide, please. And that brings me, I think, to the partnership. And I think I'll start off with Nyasha. I think we have forged what we're really excited to show you today. We have some new IP, so some new intellectual property we've put together. And there's no one better in terms of like this partnership than really the market leader and provider of NPS and CSAT in Ajua. And then end up bringing an extra bit of data to present what we'll describe to you shortly as CX360. So Nyasha, over to you. I think, this partnership and really the vision we have for a lot of the banks and the entire industry in the 6 sectors you mentioned, it starts really with asking the core question of where are these places where the narrative is saying one thing, some data is saying one thing, but we are, when we go pursue the customer, finding a really different narrative and hopefully giving that to banks so they can do something about it.
Yeah, and it's actually quite interesting because what you're showing from a numbers perspective, everyone always talks about, okay, so if I take care of my customers, what's the outcome? And of course, the numbers are the outcome, right? The 52-week highs on share price is a very good outcome. But of course, in all of that, we always have to look at that victory lap and analyze it. And we're at the center of that with the organizations that we work with. We have over 15 banks that we work with across East Africa as a provider of customer experience surveys and data and analytics that then build upon that. And the lenses that we generally talk to are your Net Promoter Score, your CSAT, and your sentiment score. And these are real international standards that we use as a benchmark for people to be able to compare and contrast how they're doing versus their competition. And then, and what's more important is how they're doing internally. So you talked about something that is really, really important, which is, a propensity to churn. You don't know your propensity to churn if you don't know, where you are on your NPS score. So there are these scores and these lenses that we allow our customers to build upon. But more than that is we want the whole market, whether you're a fintech, whether you're top 4 bank or you're a small bank, we want you to actually have the ability to actually see if your strategies are working for you. Multi-banking is going to be there. Customers have choice. But the question is, are you serving them the correct way? Are your journeys correct? And is that reflecting in the open market? And this is what we're bringing together with Nendo.
Thanks, Nyasha. I think for our side, just like Nyasha has added, the way we see it is that when we're looking at data, we're looking at it from every social network possible. We know that there's been some changes in APIs and how you access the data, public data especially. But what we are noticing is that we can put things down at 2 levels. We have what we call unbranded mentions. And in our opinion, this here is the source of so much trouble, so many types of issues for brands and especially banks. This is when people, as I'll show you shortly, don't choose to talk just to you. They actually choose to talk to their fellow people in the public. That's where the viral complaints come from. But every bank is getting better, but still not fully all the way yet with branded mentions. This is when you have your name and your username or handle being mentioned. And for us, branded mentions means you're monitoring your social media. Even if you're responding to thousands of queries every day, but you only truly start listening or social media listening when you have access to the galaxy, the universe of unbranded mentions of your product, service, and experience. And all of this is what we've brought and partnered with Ajua on, that we're calling, and it's a first of its kind in the region, CX360. It brings NPS and CSAT and world-class experience and historical data from Ajua. And then it brings Nendo's experience with social media listening and what we are going to describe shortly as net sentiment, or social media sentiments, positive, negative, and finding a through line between those two. And this for us is what we call your independent customer metric. You may have never tracked this before, but we think it's one of the most important things for you to track going forward. So we've talked a lot about how we're going to paint a contrast for you, and there's no better slide before I pass it on to Nyasha to describe than this slide, right? On one hand, you have big speeches, big half-year results, big annual year results, confetti, fireworks, all the usual things that we see when the news cameras are rolling with CEOs saying, it's been another record-setting year, here's the dividends. But as we'll show you today, thanks to CX360 from Ajua and Nendo, social media reality is very different. And so what we're seeing is essentially a fracturing of trust. And Nyasha will speak to trust in a bit. We're basically seeing that the foundation, many of these banks, and it's not just the tier one banks who show you, we have data for every one of the respective banks, including your tier twos, your microfinance banks, fintechs, and different financial services firms. But we've concentrated to show you this point through close to 200,000 mentions over this H2 time period. And so what we're seeing is that those viral complaints give us market intelligence, give us insight that wouldn't come out necessarily in NPS or CSAT, but is just as important. And that's why we brought these two data sets together. Nyasha, I'd love to turn it to you to give a bit of a perspective. If we can go back one slide, just maybe just to tell us a little bit of your view on NPS and CSAT, even as we'll speak to it later.
Yeah, no, for sure. And of course, just so that we're not leaving anyone out, NPS is Net Promoter Score, and CSAT is your Customer Satisfaction Score. So we've got these two very contrasting data sets, and what we're calling our traditional metrics are the things that we've been measuring over the last 5 years in our benchmarking report. And you can see that the sector the banking sector, the Net Promoter Score has gone up by 25 points from Q1 2025 into H2 2025, and really that is a clear reflection of the results. So the results are showing that people are banking more with the banks. They're putting more money in there. They're buying more products. They are doing more with this banking relationship. And that is also being seen in the CSAT. They're satisfied with the banking relationship that they have, but the overall sentiment, and this is the contrast that is just amazing, is that the overall sentiment of the banking environment is very different, right? So what is it saying? It's saying, if I'm in my bank and I am doing a certain transaction, I am being listened to, I'm speaking to them, but there's a big proportion of people who are not being listened to in that ecosystem that then go out and speak out in public. And that is where where we think that, you need to be looking at these two pieces together, because yes, of course, retention allows you to grow your share of wallet, but you want to grow also your market share. And to grow your market share, you need to see what the sentiment out there in the market is.
Yeah, absolutely. I think if there's one thing we want to leave you with here is not all customers are made the same. And what I mean by that is that there's two different sets of motivation that in Nendo's experience, looking up essentially millions of public comments, complaints, and comments, everything from for those clients that we'll work with of ours that will actually be in the back end looking up actual private conversations, what we find is that there's two broad ways to look at your customer base. The first of these is that if they come through the Facebook private inbox or through phone calls or email or live chat, or Twitter direct messages, DMs, Twitter now known as x.com, what you'll find is that they typically there are looking for an answer. They want resolution. And so what should banks do? What should brands do? Well, they should actually respond in a timely way, right? So your response rate matters. And though it's a separate conversation for today, we've seen a whole new crop of scammers, fraudsters, and impersonators essentially causing, in our estimation, hundreds of millions of shillings, millions of dollars worth of damage reputationally and in actual swindling, identity theft, and various other crimes, just because in our experience, banks and brands are not quick enough and they're only doing monitoring. So they're not even doing listening the right way, despite some investments in technology. So if you don't give them the answer they're looking for, if you don't set an expectation and have some sort of SLA, a service level agreement on how you're going to turn around that experience, well, guess what happens? They will come and they won't be seeking an answer from you anymore. In fact, many times they won't even tag you, what we call unbranded mentions. They will come and do what we call, seeking an audience. And here they're going to tag your page and write in private. They'll write in a group. We're even seeing nowadays on LinkedIn, people coming and writing an entire treatise, like a 300-word piece of their customer experience there. It's unheard of for brands to have to go to these news places. But let me tell you, they already called you. They already texted. They already interfaced. And they were not satisfied. That's why they came this way, because now they're appealing to the public. And if there's one thing I can tell you about Kenyans, East Africans, and definitely Africans on X and other places like that, they will put aside all of their differences, because and especially since the Gen Z protests of June 2024, if it's an institution versus an individual, Kenyans at least are going to shoot first and ask questions later. And so many brands are basically getting in the firing line of this, and it's avoidable. But so what should you do if you get caught in that? Well, we have a resource that my colleague Peter already shared, prepared by some of my other teammates here on the call as well, which is an AI chatbot to help you in a moment of crisis if you don't necessarily call Nendo. You don't have to go back, Peter, sorry. But this is what you'll scan. You'll get this in the slides. We can go back to the current slide. But really what we're also saying, building on what Nyasha said, is you now are going to have your actual real life customer experience, which is you're engaging publicly to show that you're aware and resolving it. And then you're moving privately and escalating to call them, to reach out to them, something that's not just purely online. So they feel your presence, even though, of course, you might have someone who's pretty upset. Next slide, please. And so I think, we've said it a few different ways, but now what you're seeing is essentially the blend of where these two things come together. It's what we've been saying, at least for the brands you're about to see, just like Nyasha said, which is NPS and CSAT is high, net sentiment is low. And that's a recipe for disharmony, or in some cases with what we've tracked, where you'll see actual customers. You'll see unbranded and branded mentions. It can be the makings of potentially a disaster, a really tough day at the office for bankers, both big and small. I think next slide, please. Yeah, so Yasha, I'll hand it to you. I think there's an interesting opportunity to start with NPS, and then we're going to basically switch gears and look at sentiment, and then we'll end up looking at the two together when we get Peter back involved.
Yeah, no, for sure, and it's important, right? It's sweet and sour news, right? In that a lot of our customers, the customer experience chiefs or heads of customer experience, are measured on their NPS score or as part of their performance management. So they're doing very well, and I think their bonuses are going to be beautiful this year, right? Because look at these numbers. When we say the average or the sector is sitting at about 60, that shows you that now your standard charts, your DTBs, your NCBAs, and your INMs, actually the ones that are driving great experiences with their customers. And again, if you look at those numbers, those are the banks that are really growing very fast. And so you're talking about, they're doing better with their customers, customer retention. They're adding more products. The customers love those products, And that is what is building up that financial result. Now, when you look below the 50 line, you're starting to see the guys who have actually drawn down that the banking sector sentiment. Equity for the first 6 months of last year was really struggling. There was a lot of conversations about them and their trust issues. KCB launched a new app in the middle of the year, and the onboarding process for that had a lot of friction, and it goes along like that. This is a real testament of real life, and I know a lot of people say social media is not real life, but you can actually see the contrast on what your net promoter score is saying and how the banking sector itself is faring when it comes to that social media or the market sentiment. And that is driving these moves in terms of customers, whether they're churning, whether they're opening up new accounts, their decision to say, well, I don't know if that bank is going to have my money or is going to keep my money safe. Let me have at least one or two extra accounts, and let me have some of my salary go to this account, some of my salary go to that account. And of course, Kenyans are kings and queens of side hustles. So, all this money is moving in different places. But to be able to consolidate that, whoever is able to consolidate that will be the king of banking. And I think we're seeing very strong capability from Stanchart and DTB in that environment when it comes to just being able to have the full 360 of that customer and then building upon that.
Yeah, thanks. Yeah, so I think to show that contrast a different way, when we think of what data points we're collecting from a social media standpoint, there's different ways to monitor it. We'll show you reach, we can show you mentions, we'll show you sentiments or net sentiment, and then we'll blend all those together so that for what we're calling CX360, this Ajua and Nendo metric, it's really bringing the best of all of them, especially to spot the places where they agree or disagree. Now, what you're seeing here is just a very simple question, which is how many times were these brands mentioned in 2025? And I think what's interesting from this is that in one way, when we overlay other metrics on this, it's going to tell a different story. But essentially, INM, you really see a strategy that they have been working on the last year plus, perhaps 1.5 to 2 years, which is ever since they dropped the ability to or rather, ever since they changed strategy to move towards retail, and then as a sort of sweetener or a differentiator in the market, they waived fees for bank to M-Pesa and M-Pesa to bank for a segment of their retail-facing accounts. How they've gone about getting these sorts of mentions is essentially by keeping hundreds, if not thousands, of content creators, or what we might call thumbs for hire, everyday people, the majority of whom might not actually be the bank's customers, but keeping them saying things related to the bank or talking about different bank features and so on. Now, if you've read any of Nendo's trend reports, you know that we have a bit of a mixed view on this type of tactic. While it does deliver some measure of reach, discerning customers tend to see through it and sometimes tend to be at odds, as we'll show you with the actual data itself with this. But it's going to register here as one of the greatest ones, at least as far as sentiments, or rather mentions go. Then you have KCB, and really what you start to see with the top 5 is that some of the larger banks, at least KCB and Equity, just by sheer volume, they're not playing the same game or strategy. They have significantly greater numbers of customers, say, than INM, but they're going to get that share of voice or those aspects of volumes just because they're going to have different customers coming online to say different things. And we've analyzed all of these along the way. Don't dismiss a bank like Stanbic, as we'll show you when we overlay other bits of data along the way. Each bank here is running its own race. And that's the thing to really think about. Sometimes it's easy to figure out who's in first place, who's not. But we really want to be careful around comparison on the wrong thing, right? So you want to, we talk about managing what you measure. And that's why we've developed CX360, because we think that a lot of the banks right now, not just banks, but they are data rich, but insight poor. And so part of what we're trying to do is make sure that there's a blend of NPS and CSAT and social sentiment to bring those two together. Next slide, please. and maybe turning it to Ajua in terms of CSAT to paint this story. And as we're seeing, the trends are sort of like emerging a bit. The more you see these, and we'll get to where we'll show them all together.
Yeah. So I think you talk about CX360 as a indicator to say, how do we go from this data rich place to an insight rich place, and it's how do you merge all these data points? So because we Ajua, we're experts in kind of that internal customer facing place, and Nendo's got understands the social the thumbs for hire. How I don't even before we started this conversation, I didn't even know about thumbs for hire, right? So it's building those two together, and you can actually see the contrast, right? So INM in terms of mentions is at 2.93 in terms of their CSAT score, whereas they're being matched by the internal customers of Stanbic saying, yes, we're actually satisfied. So there's what the market is saying, then Vitukwa ground. And Vitukwa ground really talks to, again, back to Stanchart, DTB, Stanbic, internal customer approval ratings are really, really high. So you have to be careful about what you measure and how you're measuring it.
Yeah, and I think one of the key ways for us to look at this is through net sentiment. And the first thing I like to say, because everybody wants this to be positive, is that this is something we describe at Nendo. We say the loudest applause that Kenyans can give you sometimes online is silence. They don't necessarily take the great pleasure in coming online to tell you, great job. And frankly, isn't that true also in the real world? Yes, there's a few people every so often who give a compliment, they leave a bit of positive feedback. But by and large, people will basically say that if you are doing your job, then you're doing what I've paid you to do in principle. And so why do we say that? Because even in somewhere like telecoms, where again, you see Safaricom's share price, you see all of the big conversation on a big sale. But if you look online, especially for key parts of their portfolio, right? Somewhere like Safaricom Home, for example, where they've done phenomenal work to become the number one in sort of that industry. You find some very heated conversations on quality of service and otherwise. And the same is true here, where for banks, you're seeing some of them with what would appear to be low levels of net sentiment. But here's the thing that we say is that at Nendo, it's so important how you discern and how you basically define meaning from these metrics. Even if you have 10,000 people complaining and it's 10,001 next month, if some of the reasons have changed, that's actually cause for applause or for encouragement. It's not always purely that the numbers have to go down or they have to be above the line, even though we might really like that. And the brands that you are seeing here, namely INM and NCBA, part of what you're noticing with them is they're going to be the ones that are really playing the game to try to get positive sentiment going and really paying their way there to a certain degree. Whereas when you now start to overlay NPS and CSAT, you're seeing the full 360 customer experience of the unspoken, unposted, untweeted experience and the online experience brought together. Maybe a last metric here just to show is reach. I think reach is helpful to keep in mind, but at Nendo, sometimes we look at this as a bit of a vanity metric. And that's why, again, the discernment is so important because with this, if you play the reach game, many great Western corporations will be happy to take your money and give you reach in return. And of course, we aren't talking about marketing effectiveness, where reach is actually a core metric that delivers long-term sales, profit, value. When you're reaching the full market, it does help drive salience, top-of-mind awareness, and conversion. However, here what we're talking about is reach as far as some of those conversations. This does include crises. So there are some brands that are less than, say, 50 million impressions in reach. But the truth is that you can't necessarily correlate this with success or correlate this purely with positive sentiment because you could be on the front page news for one reason or the other. And that, of course, could contribute towards this, even including traditional or mainstream and broadcast media. Next slide, please. So yes, I think Nyash and I might spend a few minutes here. This is again, this is part of now what you're seeing with what we'd call the CX360 perspective, which is where we're starting to overlay the metrics that matter and starting to define some of the areas on the map of where the brands sit. So as we've said, I&M sits, almost at the top in a way of this list, but that doesn't necessarily mean that with some of the other metrics that they are doing as strongly. And so I'll turn it to Nyasha to share a perspective or two here, but part of what we're saying is we're going to further interpret this for you so you really get a perspective on what this means for each of the respective banks. But part of our encouragement here is each bank, like we said, is running its own race, even though they compete in many ways for customers or for particular segments. And with each bank that you see here, we have an individualized report where we're basically going behind the scenes, bringing a lot more of Ajua and Nendo's distinct analysis and being able to give you tailored recommendations so that as much as we're saying you run your own race, it's important that you take the steps that align best to what your bank is doing, what your growth plan is, and still help you compete in the marketplace. Nyasha, I'm not sure if you want to say something before we hand to Peter to take us through some of the other parts of the data deep dive.
I think this starts to bring us, a little bit closer, right, to say, what's happening internally versus what's happening in the market, and then actually start to drill into how does this then affect business going forward, right? So, when you post really good results, you want to keep posting those results, right? You want to keep going up and up and up. You want 10%, 20% growth, right? Now, if you're thinking about it from your perspective as a bank, NPS score has been, proven to be a, every marked basis point improvement in your NPS score means that you're going to have a marked improvement in your revenue, right? But that is retention revenue. And now what we're bringing with CX360 is telling you, okay, what does it mean to acquire new customers in this market? And where can you acquire those customers from? How can you acquire them? And with what strategies you can acquire them with, right? Because we're not just, it's not a feeling or a sentiment strategy, a sentiment-driven strategy. It's a data-driven strategy, and we've got the data, and we're bringing these two data pieces together to show you. We can go through, Peter.
Okay, I hope everyone can hear me. On this chart specifically, we're going to look at NPS against net sentiment. We looked at all the individual companies, got the NPS scores, and aligned it with net sentiment. And we found something kind of interesting. Is that, again, as you've seen before, public perception doesn't necessarily match with what people are saying with their services. You take a survey, you see this service is amazing. It's amazing. But people go online, anytime they're online, it's, I hate this, the app isn't working, it's annoying, I can't do this. And this is something that we saw across the board, whether it be security, whether it be app failure, whether it be customer service. There were issues being complained all around throughout each bank. When you look at Standard Chartered specifically, in this situation, we kind of see that, high satisfaction surveys, like I said, doesn't necessarily it doesn't necessarily mean there aren't going to be operational failures being mentioned online. Just because you have high satisfaction, like the charted over here, you're still going to get issues online and people complaining on social media. And getting into what we discovered here with our partnership with Ajua and Nendo is the CX360 quadrants. We have the halo zone, the champion circle, the friction zone, and the contradictor zone. You might be wondering, what do these words mean? What do these specific quadrants mean? What does it entail? Well, to put it simply, all brands and banks in this situation want to be in the champion circle. The champion circle basically means it's the gold standard. It's where customers feel the most happy and the services are the best at the same time. You're being talked about positively online and people also saying your services are good on the ground. And then there's the halo zone. Halo zone is kind of interesting. It's where CSAT is high, but then also the sentiment. I mean, CSAT is low, but then also the sentiment is high. You might be so. What do you mean the sentiment is high, but people on the ground are saying the services are low? Well, this would entail that marketing campaigns. Those people who get paid a bit of money to talk very positively about the brand in mass. That's what usually happens in the halo zone, where many people in mass are talking positively about a certain brand because they might have been paid, while the services necessarily aren't the best. And then we have the friction zone. This is probably you don't want to be here. This is you send people. People are saying your services are low on the ground and online as well. People are talking terribly about your brand. So if you're in the friction zone, you want to run out of there as fast as you possibly can. And we will share a few recommendations later on at the end of this particular webinar. And then lastly, we have the contradictor zone. Contradiction is some people are saying that your services are very good on the ground, but for some reason, your sentiment is low. This creates a certain perception gap, and it happens to banks which are very technically proficient, but they're kind of missing that human touch when it comes to the marketing and the perception online and out there in general. Now, for anyone over here who belongs to any one of these banks, you can take as many screenshots as you want for this. This is very cool data that we gathered here, where we split the quadrants into the four different zones and put all of you onto a particular chart. On the top right, we have the champion circle. DTB isn't there yet, but they're very, very close. DTB, you guys are doing well technically. We just pushing the marketing a bit more. But yeah, on the bottom right, we have the contradiction zone, where technically the services are actually good. However, there is that issue of missing the human touch in marketing, and yeah, there's that. What can I say? People might view you as cold or expensive online, if I'd say. And then on the bottom left, we have the friction zone. You can see over here, the mentions are high too. And not only is the mentions high, but the CSAT is low. And not only is the CSAT low, but the sentiment is low too. This is a very tough spot to be in. But then again, it does make sense. Like Nasha mentioned before, KCB did launch an app mid last year. When you're launching an app, there's going to be errors. Equity as well dealt with a bunch of crises last year, and same with cooperative. So, this was an amalgamation of different crisis events happening, as well as just having people complaining as much as they possibly can about your brand, which is very unfortunate, but you need to do your best to get out of this situation. And on the top left, I mentioned before, is the halo zone. Over here, we can see INM and NCBA are kind of lingering there because, INM has very high mentions and they're really pushing on their marketing online with, maybe paying a few people to talk very positively about their services, like the free M-Pesa service that they offer. And NCBA is in a sort of a similar situation. And then we want to kind of understand, when it comes to the champions and people who are dealing with friction, what separates these two? I mean, like we can see right now, there aren't necessarily any champions, but those who are close, like DTB, like ABSA, INM to an extent. And yeah, so what are these guys doing right that people who are dealing with heavy friction are failing in? There's the people in friction failing in the basics like clunky apps, poor services, and high fees, which we'll go into in a few minutes. And then the champions who are leading in world-class services throughout. And let me take you through that. So the six particular key themes that we found that champions have throughout the board. This would be the digital experience is top-notch, fast, quality. The UI is amazing, and the customer loyalty on there is high. And then there's the customer service, it's professional. There's a bunch of support 24/7. And whenever there's a problem, they solve it quick. And then there's an omni-channel accessibility. Branches are available, online services are available, internet banking is available, mobile banking is available. So having multiple different channels and access points for people to engage with your bank. And then there's the speed, of course, being able to transfer money as fast as you possibly can. And then there's fee transparency, no hiding of fees. This is something that we found an issue with some banks where there are a lot of hidden fees and high documentation going around that prevent people from actually knowing how much they end up paying. And so good banks have fee transparency. And then there's security and trust. Throughout the whole of H2, there are a bunch, and I mean a bunch of security failures. And being able to protect your customers and help them know that the money is safe with you is a key theme in world-class leaders. So what are a bunch of these customers saying online? For the digital experience, they're saying the app is very efficient, it's friendly, the customer service providers are very polite, fee transparency, the services are quite cheap, and the services are fast and reliable, and what we all need and want, it's a bank that we can trust with our money. My money is safe. And going into now the core problems that we found, we did a little bit of digging with a sentiment, a little bit of digging with NPS and CSAT, and we found some really interesting issues. There being the apps are always under maintenance, accessibility of banking services is low, there's poor customer service and long wait times, high hidden fees, and a lack of security. And the funny thing is, we have also found that all of this is kind of interconnected, it's weaved together. What happens when apps fail? When apps fail, the people who generally bank online now have to go to the actual branches. When they go to the actual branches, now the queues are long because there's so many people going on. Because the apps are failing as well, they're making so many calls. Now the customer service people are overwhelmed. Now people are saying there's poor customer service. Now people are saying there are long queues at the banks. Now people are saying there's hidden fees, and all these just go and intertwine with each other. One issue stems to the next and the next and the next. So some customers were saying, like over here, the Equity app can mess your life sometimes. I don't want to say that, but it does happen to people. And and I know some people over here mentioned that how they receive so many calls from scammers claiming to be KCB. Others talking about how they've been a customer of NCBA since the Nick days, but it's time to close the account, and we don't want that anymore. We want to take customers from a place where they have complete and utter trust in you and don't want to churn. Talking about churn now, we have some of the churn drivers. So over here is the breach of the fundamental promise, like I said before, and like this person mentioned here, is my money safe? There are multiple instances of fraud in H2 of last year. Not only one bank, but multiple different banks. So with Equity, the Equity line failing and money being withdrawn, and then there's the cooperative where a teacher lost 200,000 shillings. And in ABSA, people complaining of money being deducted from their accounts. And, this didn't stem only from the banks listed here. It was along multiple banks last year. And some of the churn drivers is, the digital channels and the customer experience was failing. Like I mentioned before, all these issues are intertwined. When a system fails, people start messaging customer service. And when your customer service is telling you to call them back after you already messaged them, that brings out a big issue. Like look at this person here. This is cash from your end, blank. I don't want to say the name. I DM you for support and you ask me to call you. Actually, we have responded. No wonder I stopped having you as my primary banker. I'm not going to say that last word. But you see here, the issue is poor customer service compounds the failure of digital services. And like I said before, it's intertwined. And more churn drivers being hidden fees and long documentation. This is highly detracting in bringing in customers and keeping customers. Like some customers generally feel robbed when they can enter a top tier institution, and when they're going to fill in basic information, they're not filled in on some services that they have to pay for to take on this service. That's something that we need to be very clear on. It shouldn't be on the fine print. It should be big and labeled. It'd be very transparent, and customers should know whenever there's certain fees or whenever a fee might be too high for their expenses. And then there's the documentation fatigue. This is something interesting that I never really considered. But when you enter a bank, in actuality, there's so much documentation that takes place. Sometimes you wish maybe I could go online and type in a few words and I'm done, I'm registered. But that's not the case with a lot of Kenyan banks. You have to go to the branches and actually fill out the documentation. And although people here complaining that what's the need of all of these documents? Now, at that time as well, during H2, the period of April 1st to 30th, 29th September, we did an analysis of the key spikes that were shaping truths within the banking industry. We found that crisis, these particular spikes, I tell you this, none of them are positive. And you could kind of say that each one of this was a crisis event. And over time, these different crises lead into becoming accepted truths, which we want to avoid and mitigate as much as possible as a brand. Okay, now going into the calls to action, how can we actually mitigate all of those issues that you mentioned before? First we start with driving digital first, having good digital services that fail not as many times as they have been failing in the past. And we're also having good brand support. If those digital services fail, and no matter how many times they do fail, we need to be prepared to handle as many customer calls and support calls as we possibly can. And then, like I mentioned before, we have to ensure fee transparency. We have to be very open about how much you're charging, and don't hide it into the fine print of the documentation. And then the last one is prioritize risk mitigation. We have to be ready for these things to happen, for these crises to take place before they ever take place. Start launching those campaigns out there, like the Kachonjo campaign that each bank has been doing in Kenya, which is very amazing. But such campaigns do help, and they do change how the banking system works here in Kenya. So before I close off on my particular section, there are a few recommendations that we did find for a few of the banks who are here today. So I'll go into the findings and some of the recommendations. So at INM, we found that the narratives are free bank to M-Pesa messaging creates a halo effect. Like I mentioned before, in those 4 quadrants, it creates a halo effect, and customers are increasingly venting about frequent app maintenance and a recent backlash in human customer service. So what's the recommendation that we give you using this 300 and 360 model that Nendo and Ajua developed? Well, first, it's proactive uptime management. And you can implement immediate notifications within the app to warn users of maintenance before they attempt transactions. Just telling the users we're going to maintain the app long before you start maintaining the app, which that we found that tends to work. And then we also did come up with 2 other recommendations, which you can get later if you give us a call after this. And another finding is into KCB is the recurring narrative of missing money and overnight record clearing is driving service and severe anxiety. We found that was very interesting last year too. There are a lot of scam reports going on with KCB and people saying the money has been lost. And I wouldn't say this was necessarily skewed only to KCB, but it did happen with other banking services. But with KCB, it was a bit higher than the usual. And, customers feel unheard when citing, customer care doesn't pick up my calls. So what's the resolution? We have to find fraud transparency. Publicly communicate the closure of fraud cases to combat the missing money narrative driving anxiety. You have to be as loud as you can when the issues have been fixed. And with equity, we found that it's facing a trust crisis. It's not just a utility crisis for equity, but it's also dealing with a trust crisis. And we found that there's a deep anxiety around the equity lines and scamming within those equity lines, that's really eroding equity's brand equity. And we have to do for equity, what they would recommend them to do is rapid scam mitigation. Invest in automated tools that detect and take down fake scam alerts in phishing sites and in real-time situations. For each one of these banks, we did create 2 other recommendations. And for any other bank who is over here, we do have recommendations for you as well, as long as you give us a call later on. Now, I'd like to pass the baton back to Makanyasha, who would take over from here.
Yeah, so I think one of the main things, just staying on this slide for a second, for us is we really see the same contrast we started this presentation with across the banks, which is that on one hand, enjoying marketplace, share price, balance sheet, just success by the economic metrics. But when you look behind that, even though you see NPS and CSAT by extension pointing a certain direction, you look online and that's where you see the weak spots. When we think about the marketplace and we think of established players and also what we would call challenger brands. Challenger brands have the opportunity, or challenger banks, if you want, to take advantage of this moment. We think that there's a game plan, not just to really compete with more established legacy and larger players, but also more precisely to really carve out customer centricity that's missing, even in the names that you would really expect to be taking care of all their business. And so there's some really great conversations happening in the chat, courtesy of Akshay, particularly on fees, and we're chiming in from Nyasha and myself. But really, we're about to turn it over to you. So I want to prompt you before we land a few final things of how you can take this conversation forward as we get to the Q&A. We have the Q&A function available for you to ask questions, and also we'll be turning to you. So if you have the ability, I think, to potentially raise a hand or speak to us through the chat, that would be great, just so that we can be able to hear from you or give you a chance to ask us a bit more. But looking to this slide, I think for us, the current challenge right now is the cost of doing nothing for some banks, particularly when they look at the large business metrics. And like Nyasha was saying, some of the bonuses are pegged to things like NPS. So some of those are looking or trending in a certain direction. But what we're seeing is that some of the most vocal customers, who we at Nendo call connected customers. So if we look at the average revenue per user, these might not always be ultra high net worth individuals, but they certainly will comprise people on the higher end of the spectrum. They're taking their mobile data, their connectivity, and coming to communicate publicly with you and actually expressing all the things you need to do right by them. And what we've figured out in Kenya over some time is that the loudest type and most painful type of exit from a client is the one they don't tweet, they don't talk, they don't call, they don't mail about, they just decide. And they vote with their wallet. And so this here for us is a leading indicator in some ways. Net sentiment, especially within CX360, is your chance to get, as we said, a 360-degree picture. So we're saying the banks that don't listen, don't act, don't actually take this up, and not just banks. You heard what Nyasha said. There's other brands that we're going to be looking into, and we'll be announcing that in the fullness of time. But what we see here is that they might overlook the data or be content to purely social media monitor, which is I'm going to respond to who tags me, but not social media listen. And so what happens is there's a misalignment there that leads to frustration inside of the organization. Another maybe big strategic point to consider is that many of the banks right now, especially the ones we've mentioned, are all creating either apps or experiences that don't need you to be an everyday, filled in all the paperwork type of customer. So what we're seeing is they're creating apps either for lending that are separate credit-only experience. You download the app, you give some minimal but required KYC, and then you start a relationship with their mother brand through another name. And so this is attracting sometimes thousands, tens of thousands, hundreds of thousands of customers, many of whom will actually be some of the loudest voices here and can end up souring all of the sentiments, right, on the bank or on the brand. And so this is the discernment that you need to looking up the data that you experience every day and making sure that you're not missing out on information or dealing with crises that were either avoidable or could have been addressed in a different way. Take the next slide, please. So I think for us, the brands that are going to take this forward are going to approach it slightly differently. And so if you look at the title of this actual webinar, it sums it up. We need you to see. you can have your eyes open, but it doesn't mean that you're seeing. And so that's an invitation from us as Ajua and Nendo, that you might be looking at information, but it doesn't mean you're measuring it. You might be having access to data. It doesn't mean you have insight. And so the intelligence you get through the conversations we're going to have one-on-one with you is really something that we're excited to bring a lot of my teammates who put in a lot of work on this, in addition to the entire Ajua team, to bring that in. Next, we need to think, right? We're always in acting mode, sometimes in reacting mode. But here we're saying, if Nendo could show you your intent to churn, right? So the actual metric of who here is planning in the next 12 to 18 months to join another bank, which we can do and track over time at an individual bank level. How might you act? Because now you get the chance, similar to what Akshay opened with, you get the chance to move from somebody who's there to engage a customer to somebody who could close a sale or could actually keep a customer from walking out the door, like we've said. And then moving is about what set of steps do we want to take to move forward and who's involved. And then winning really is the byproduct of doing this well and having a shared target and sense of direction. Next slide, please. So we have individual report on individual banks, and today was to give you the full picture. You might be a tier 2 bank or even a tier 3 bank, for instance, who has customer centricity at the core. You might be a challenger bank, a microfinance bank, a new player in the market looking to bring something different. Nendo and Ajua have something for you in our CX360 reports. And so you can reach out to us to book a call and really just get your experience at learning more of what's possible for your individual organization. And after this webinar, we'll be reaching out to you to see what more we could do and partner together from a technology standpoint, from a data and insight standpoint, and certainly from a measurement and what basically steps you take to addressing some of these core issues. Next slide, please. So here's where we are right now before we get to Q&A. And I hope you've been reading those questions for those of you watching us. So first is we're here in this webinar, right? And so our judgment to you is with your organization, particularly if you're one of the respective banks mentioned here, or a banking adjacent organization, right, that has growth, sales, and profit as its objectives the next 12 to 18 months, of which I believe it's everyone, you want to see what we've got for you. And so we're inviting you to a complimentary, so no expectation of payment, 30-minute consultation with us. And there we'll be able to talk a little bit about some of the high-level notes that you saw from Peter, Francis, Darius, Janet, and the team here. And you only saw one of those. There's multiple recommendations, each tailored to each bank. So that consultation allows us, if we're a fit for each other, to go through that, show you that information on your bank or brand, and then be able to put a proposition in front of you for how we can partner as Nendo, as Ajua, from the technology and software standpoint, from the services, solutions, and insight standpoint altogether. And if that goes well, part of what we would then do is go out based on some of your needs following the 30-minute consultation and start to put together a deep dive for you. And based on that, we would basically give you our tailored CX360 report, showing you your quadrant ranking in greater detail, giving you key performance data and competitor benchmarking, and ultimately help you get to where you can see, think, move, and win. Next slide, please. I think we're almost at the end before we do Q&A. So we're getting to Q&A now. We're going to leave this slide up. I see Simon has his hand raised. So thank you, Simon, for being the brave one to sort of start the conversation. I want to give you the floor and an opportunity to share your question with us. If anyone has, I think Simon might have just dropped off, but if anyone has a question for us, I believe you can either raise your hand or reach out to us here in the chat, but we'd be happy to have a discussion with you on CX360, on the data you've seen, and on the next steps of how we can take this forward, thanks to Ajua and Nendo.
Mark, you said there was a question?
Yes, but I think he just dropped off.
So
I think he might have been, he had raised his hand, and then I think he dropped off perhaps by accident and might be rejoining shortly. Gentleman called Simon. In the meantime, I think maybe for me, maybe a question to you, Nyasha, which is, when you're looking to this year and thinking about NPS and CSAT and some of the conversations that clients are having with you, what would you say is the key point you're repeating the most often, meaning it applies to the most people because maybe not enough people are doing enough of it. Maybe that would be something helpful from just your experience, and then I'm happy to take a crack at the same question too.
No, for sure. I think, going into 2026, the reason why we called this a trust conversation, there's a lot of guys who are doing well in terms of surveying their customers, getting better data from their customers to understand where they are. But something that is a theme throughout, I was with the hospital group this morning, earlier this morning. I was with some public sector people yesterday, and it's trust. It's how do I get more, the trust of my customer, because trust builds loyalty, which builds the ability to retain more revenue and to build on that revenue baseline. I think we have a question from Patrick. You can unmute him.
Yeah, thanks for the question, Patrick. I've just unmuted you, so you have a chance to speak. Not sure if you can able to speak, Patrick. I think you've got your hand up, and I've.
Can you hear me now?
There we go. Yes, we
Sorry,
can hear you now.
Chrome was taking a bit of time to register my unmute. So thank you so much for the presentation. It's quite insightful. I have a question around the quadrant where we have mapped the brands and looking at the friction zone. I see the top 3 in the market, and we gave reasons there of given what happened for KCB Equity and COP. So I'm just wondering whether, given that we have the top 3 in the friction zone, how does this stack up against other time periods? Maybe you did this last year. Does this look similar if you look at maybe 24, 23? And what then would be your point of view on the same?
Excellent question. I think, I'm happy to take a part of that. And then I know, Nyasha, I could also turn to you, Akshay, if you want to share. But this is the first of its kind. First time we brought this data together. So I can only speak from what we've seen before in banking generally, because we track social media sentiment and social media listening for a range of the banks, some of whom are here, and we're really proud to serve them in that way, and always looking, to do and to learn more to provide those timely insights. So what I'd say is one of the key points coming out of COVID that I recall was the reintroduction of fees. So this is tying back to what Akshay had mentioned earlier in the chat a few times. When banks collectively lobbied back at the central bank, including M-Pesa, to reintroduce fees, that created a very interesting response from the public, particularly in social sentiments. People for the first time, and we have this in a separate deck, we had the pleasure of making the social media code of conduct for the Kenya Bankers Association. So we have dozens of banking crises, examples, fraud, all sorts of things related to banking that we didn't show today, but that are part of our partnership with Ajua that you get by engaging the two of us. And what we saw at the time was that conversation started people genuinely shopping around for banks, because they now started to say, I've been enjoying fee-free banking. I've had a taste of what that's like. And of course, we know that one of the banks here, the one that's sitting just outside the Champions circle up there, and actually, if I'm not mistaken, NCBA has a type of retail bank account where they followed INM's example to try to have zero minimum operating fees. And I'm not saying that Co-op don't have it with their account. They are different. Each of them have a different account where some of this applies. But in terms of that bank to mobile money to bank, a lot of fees sort of get into that. And for us, at least with INM, we saw widespread, conversation happening that I think has carried on till today. But for CX360, we haven't done it before. But I think from NPS and CSAT, I know Nyasha will have a great perspective to add here too.
Yeah, so I mean, like I said, we've been doing the benchmarking on NPS and CSAT. So the numbers have been trending upwards, and you saw that from Q1 2025 to H2 2025. NPS for the sector has gone up by 25 basis points. So even with those challenges, even if we go into 24 and 23, even with those challenges, the net promoter score or the customer satisfaction within the banks is generally trending upwards, even with the friction that is happening. What the friction does, and this is where this challenge comes in, is how does it give you, what does it mean for net new customers? Because people are seeing this friction, this conversations. And so if I was thinking about a new bank account because, I'm tired of my traditional bank or whatever the case may be, what's out there becomes a decision point that I use, a data decision point that I use to choose. So that's why we've brought them together. Unfortunately, this year this is our baseline. So next year you'll be able to see, if there's any friction points with the three largest banks, or any bank really, will be able to see where they are sentiment versus their NPS. There's another question on the chat from Eric. It says, when digital features are commoditized, what's the one operational resilience investment that delivers the biggest CX trust payoff? Well, I'm going to answer that, and I think Mark has some thought process behind that too. But from our perspective, and not to rag on communication, PR and communication teams, but what we're finding is that engagement is number one, right? So how you engage. So if we take the example of the KCB app that was released, there was a lot of confusion about, if the app doesn't work, can I go back to the old one? Where are things going? And it's just an engagement tool. So a lot of the customers that we work with, we're now talking about transactional surveying. So that means surveying at every digital journey point. So it's a one question: how do you feel? Rate what you've just done. This transaction, 2-star, 3-star, 5-star. By building those data points, you're able to get a better viewpoint of where your journey is breaking and where the customer has issues, and that's where you can build resilience. If you don't have those feedback loops and those engagement points, then people, as Mark says, they'll go looking for an audience. I don't know, Mark, if you have anything to add on that too.
Yeah, I think I can tie that in also with the question, the two questions here in the chat, Eric and Mika, who've both asked this. So I think for us, not all messages online in terms of social are made equal. So when we're basically being able to triage or work through with brands, we're sampling from what's out there. We're looking at what's service, product, or experience related, and then there's some that are non-product or service or experience related. So when we talk of, for example, branded versus unbranded mentions. Unbranded mentions will be things, for example, such as the product or people asking someone else to pay them at a particular bank account. That's one customer asking their customer to pay them. It's not service related, but it's worth catching because because a lot of issues start here when people are talking to each other. So at that level, part of what we do is we're pretty big on ranking and classifying the data because part of one of the first things Nendo does is, regardless of whatever technology you've invested in for social media monitoring, Nendo, we have a belief that on day 0 or day 1, we can significantly increase the amount of data you're seeing and getting access to. And that's what, my colleagues Francis, Darius, Janet, and Peter do a lot of, which is just making sure that the Boolean query we use to search is as broad and expansive as possible. That's the string of text we use to gather all the misspellings, the names of executives, the names of products or services, etc. So it starts there. Now, I think to Mwika's question a bit, we don't want to waste any staff members' time or have any awkward conversations. So I think there's a bit here where we get the opportunity to avoid false positives or false red alerts. So we both have AI-based alerts that are using the system for real time, 24 hours a day. And then we have sort of the human in the loop who is helping to arrange and categorize. And so part of what we're doing is we're always training or doing what's called machine learning to make sure that for Sheng, for slang, for sarcasm, for humor, for non-service related queries, the machine, right, the tools that Nendo is using are getting better over time at picking that up in Sheng, slang, and vernacular. And then you now have the other side, which is saying, okay, in the actual interaction between us, we're really focused on the insight and the recommendation. So I think with that said, I'd love to pass it on to Akshay to give us a little bit of perspective here, so that we can get some point of view on digital.
Thanks, Mark. The one thing I want to say about digital is that given the way we are evolving as a society, right, the reliance on the digital experience is going to become more and more fundamental to the experience that a customer has with any bank. However, this has to be balanced with the banks becoming more human and more empathetic. Because if you're just going to allow a broken digital interaction layer for the customers to engage you with, it's just going to keep on piling on the friction and the frustration. I mean, think about it this way. When somebody needs to get hold of somebody in the contact center, they've memorized what is the sequence of the IVR to get to a human agent. Nobody is interested in going through press 2 for this, press 3 for this, right? So when it comes to how do we differentiate from ourselves from a digital perspective, is actually how more human and empathetic can you be as a brand to your customers? And that is digital differentiation.
Yeah, I'm hoping I know we're almost at our time. Any final questions? I think there's a second one that's come. Eric, I've just seen you put it here in the chat. And you ask, what is the behind-the-scenes operational improvement that gives the most customer trust? Well, almost everyone in the market has similar digital tools. I can speak to this and then open it up for anyone from Ajua to speak. Part of what we do in a workshop that we have called Succeeding at Customer Experience Online is really make sure that we know what game we're trying to play. Because similar to what Akshay has said, at the human side, if you know your tone of voice, the number of times we've seen marketers are talking out of this side, CX are doing out of this side, and QA is bashing CX for matching the way, our tone of voice, our approachability, etc. And sometimes it's not following through. Similar to what the Ajua team have said. What I see in your playfulness and in your casualness and how you're interacting in a very expressive way online is not being matched at the branch with the teller, with customer support, or when I call. So that creates a bit of a disconnect. So this now moves away from tools to what Akshay was saying, which is the human experience. And if we draw a thread from one side, online to offline and back to online again, what part there do we want to make our signature? And then what do we learn when we reverse engineer what's working for other banks, which is some of what we do with Market Intel, where we can look up their app, get all the 1-star, 5-star reviews, look at where it's, where they might be weak, which has potential points to recruit in terms of intel and marketing. And also, if you think of your tech or development team and what they build,
I think we may have lost Mark.
there. So I think for us, it comes down to, yes, please.
Okay, we had lost you. Sorry.
Oh, sorry about that, guys. Yeah, I think So I'll put it basically just to close it as deciding what game you're going to play and figuring out the human side, which is what way can you bring just a bit more that moves away from we have this tool and we've switched to that tool. I think the tools are at best, less than 0.25% of the actual work and outcome here. I think alignment starts person to person, internally, and then person to consumer, whoever's, either that front line or whoever's, monitoring quality assurance for those teams, similar to the AI tool that we showed you that's coming from Ajua very soon. Not sure who on the Ajua team might want to speak to Eric's second question as well.
Yeah, no, I can take that, and I think you've actually put it very well. Is that people need to know what game they're playing, or what race they're running, right? And there's always going to be a disconnect between what customer experience is trying to do versus what marketing is trying to do, and if you can unify those two messages, then the digital tools that come behind that are actually, will actually be seamless. Some people say, get us on WhatsApp, and then the WhatsApp is not automated, or it is automated to the point, as actually said, that you never speak to a human. So it's the messaging on top, and then the technology actually then drives the experience of how the messaging is actually experienced. So I think you answered that well.
Thanks. I think we've come to our time, ladies and gentlemen. I'm not sure who would like to close us out. Darius, I saw you unmute. I'm not sure if you have maybe a word or two, but
yes, I just wanted to also just put a comment onto what Eric asked in terms of operational improvement that gives the most customer trust when almost everyone in the market already has similar digital tools. So for me, I think what Mark you had mentioned before, I think sometimes doing a digital audit, or maybe just as an audit of what you're using, and then now picking up from what is working for the other, so that we can also implement on your side that maybe the things that are working for the others best, then see how we can get insights from the ones that are working, then we can customize that to our side. Then I think that will give you a competitive edge. Yeah, thank you.
Excellent. I think, happy to do a very quick vote of thanks. I think our appreciation to each one of you, I think for joining, really grateful for that. You'll be, that's why we've had this slide up. You can actually book a consultation with us just by taking your phone and scanning this. And you'll be hearing now from the Ajua and the Nendo team in what we called your free 30-minute consultation to be able to take yourself, your bank, your institution, your team to the next level. We've got a range of solutions there, from the software side to reports, to training, but really we're taking the conversation based on you and where you're coming from to help you get a perspective of CX360. I want to appreciate the entire team at Ajua, Nyasha, Akshay, Claire, Noella, and everyone else. On the Nendo side, appreciate Peter, Darius, Janet, Francis, and the rest of our teammates, some of whom joined us well and all contributed. And grateful most of all, again, to you. So expect to hear from us through email. This is actually the beginning, so expect to see a bit more on LinkedIn and elsewhere. We'll be a lot of what we've launched today, but please feel free to your learning, and you can refer them our way at any point with any of our communications lines or websites as well. So I think we'll get maybe the very last slide as we dismiss people, Peter, which is just in case people want to email directly, visit the site. They've been publishing their reports for over 5 years, and if you know where to look on ajua.com, you'll be able to very easily find them. So plenty of resources. We've all worked pretty hard to make free and available to you, from newsletters to videos and tutorials and guides. And so grateful again for you joining us today for the Trust Crossroads. And so we hope like Eric said, I think in his goodbye here, that you're a bit better informed on why banks, not everything is going well. And in this tension, hopefully you know a little bit of what to do, and best of all, you know who to call. So thank you again for your time and attention today, and wishing you all a wonderful day ahead and rest of your week. Thank you.
Thank you so much.
Thank you.
Thank you, guys. Have a good afternoon.